After falling to depths not seen since the Great Depression, the U.S. housing market may finally be rising from the ashes. Record low mortgage rates are drawing in more buyers who are soaking up the glut of distressed properties. Our next guest says there are even bigger opportunities in the commercial space. For more on this front, we are joined by Robert Gray, managing partner at TerraCap Management Corp. Robert, great to have you with us today.
Thank you, Catherine. Good to be here.
Can you give us a little bit of the landscape right now as it relates to the commercial market? Because there really just has been so much focus on homes as individuals versus the commercial state. So what's that really looking like these days?
Sure. It varies by market. What we're seeing now is historic opportunities that we haven't seen since the savings and loan crisis back in the early 90s, when the RTC was formed and some extraordinary bargains were had. But you have to be careful where you look.
So on that front in particular, where are you looking and what's really driving some of these opportunities?
We see a series of factors as being crucially important. First is demand, long, strong population growth, so sustained population growth. And we see that in the southern United States, especially in Florida. And that's only powerful for prices if you also have constraints on supply. Florida, as an example, is a peninsula-shaped state with a lot of land in permanent conservation. So there's high population density that's further heightened when you look at the constraints from the conservation land. And prices are at about a third to half of replacement cost. That's not always the case in other markets. So that's a good opportunity for outsized performance.
Robert, it's Colin Stewart. There's been a lot of talk about cap rates coming down a lot and being very low across the real estate sector in general. And is that a concern in the areas you're looking at? Are you finding attractive enough cap rates to go in and make large investments today?
We like the low cap rates on the sell side, of course. When we buy properties, and Catherine had mentioned the idea of distressed opportunities at just before the segment, what we look at are high-quality properties in good locations, but where there might be something distressed about the operations. So it might be an empty building, for example, and in that case a cap rate wouldn't apply because you don't have a net operating income. You don't have revenues and expenses, so you're buying per square foot or as a percentage of replacement cost, getting it to a level that when you sell it, you're selling it at a good cap rate. There's plenty of those opportunities.
Robert, I'm wondering, though, if there's so many of those opportunities, what the overall economy looks like in Florida to you and the Southeast, because presumably you do want to have those buildings generate cash flow for you. How much of a concern is that?
It's a great focus of ours. You need to look at what is going to generate the demand at your specific asset. Every one is different. Every address is different, and the characteristics of the building and its submarket and who generates jobs in the area are different. Florida's created 140,000 jobs under Governor Scott, and he's continuing to bring people toward Florida. The population as a whole is growing. Homes are being built again, and the inventory of homes is going down. So we see good opportunities to fill the commercial space, and we're doing that with the portfolio we own.
What's the best way for our viewers, for the retail investor, to kind of capture some of what you're talking about? How can they participate?
Well, there's a couple of ways. You might look at what's happened with the home builders. Most of them have roughly doubled this year, so there could be further upside in that, and I'd suggest you look at the balance sheets and the strength of earnings for each one of them individually. But in private equity, the opportunities, I would say, are much greater, especially if you look at a certain swath of the market between $2 and $20 million. Too small for the giant funds to invest, but too big for the small investors to access unless they use leverage, and it's hard to get leverage from banks on an underperforming asset.
Robert, you've talked geographically where you're focused, and with Florida, are there certain sectors of the economy you're trying to look at when you're focusing on commercial real estate, whether it be healthcare, education, or other types of businesses?
It's a good point. We are careful to look at places where the economy is diverse. There are some markets. You could see Cape Canaveral as an example within Florida, where there was a concentration of employment, and they're having some struggles right now getting through that. Other places like Tampa, Orlando, the Fort Myers area, Miami, all of them are beginning to rebound, but there's still a lot of assets owned by banks. that can be had for very low prices with strong potential for the future.
Right, but I'm wondering as well, when you look at the housing market right now, just in the United States, just to get your view on this, there's been a lot of debate in terms of how much improvement we're actually seeing. What's your take on this, and can it continue?
I think it will continue. There has been debate, and there's been quite a lot of talk about shadow inventory, which is a very interesting topic. It's something that's been coming down, according to the National Association of Realtors, from something like 4 million homes to 3 million homes. But when you look generally at the amount of inventory that's for sale in markets, the volume of sales that are taking place, the prices, and the beginning of rebuilding new homes, again, it seems that this is a recovery that has some traction.
And do you have any concern, though, in terms of the pace at which this shadow inventory might come back onto the market? Or, I mean, you're in the private equity space. A lot of private equity people do own some of these homes, and the thought is that they'll be very methodical with putting it back onto the market. What's your thought there?
That seems likely. I think that's a good point. The banks are, they may have had some challenges in the past, but they're certainly highly aware what would happen to them if they dumped all the inventory on the market at once. Because interest rates have been low and they've been able to increase their loan loss reserves, they've been able to be somewhat patient at selling these homes. A lot of what remains in the shadow inventory now are second or third homes, so they're not always the primary residences, so they don't have as much of an impact locally as it would if they were still the primary residences.
All right, Robert, we're going to have to leave it there. Thank you so much for joining us today.
Oh, pleasure. Thank you, Catherine and Colin.
Thank you. Robert Gray, Managing Partner at TerraCap Management Corp. And let's